I think holding Bitcoin is a great strategy when you are in the bull market. What happens once we enter a sideways market? Some of them may not survive.
First, I'll have you introduce yourself and what you do.
I am a tech founder of AI music startup. But at the same time, I have been investing in crypto assets. And what we discovered is
What's your greatest ambition for this company?
the first step is buying the first coin. The company already accomplished. The second step is to start the Bitcoin accumulation business. But
Perfect. I always like to take a little bit of an interesting question from my guests. So, when's the first time you heard about Bitcoin?
that's a very interesting question. I actually heard about Bitcoin in 2014. Back then, I was visiting Beijing, and me and a good friend of mine went to an event, talking about. The event was about this crypto digital currency,
Right.
and I thought it was bullshit. And me and my friend left to go to some party. I was like, "What's this? That's totally bullshit. How could you create money from just thin air?" And it's, we both studied traditional finance, and we just thought, okay, it has to be fiat. This doesn't make sense.
What was the attitude like around Bitcoin in Asia at that time in 2014? I know in the US it was mostly kind of like tech. It was like this weird tech thing or this weird like libertarian political thing. Did the finance industry pick up on it? Did the tech industry pick up on it? Like, who was following Bitcoin at that time?
To be honest, myself, I actually didn't follow Bitcoin at the time. I went to one event, and I remember I went to this one event, and we left after 20 minutes, right? And then I had a tech startup in China back then, in mobile internet, mobile payment, social network. And I remember that I hired both my two kind of CTO, two senior technical person were in crypto, and they were in crypto mining. They were some of the biggest miner in Litecoin at the time. And I convinced them that crypto was no good and they had to do mobile internet and mobile payment. And also because 2014 to 2015 was a year when crypto dropped a lot, right? It's really I think 2015 was like the bottom. 2016 started to pick up. And then I really heard about it in 2017, where everybody started to talk about ICOs. And I was considering if we should do some ICOs. So in between, I convinced some of the people still work for me today. I convinced them crypto was no good. But if they had convinced me that crypto were good, I probably would have bought Bitcoin or Litecoin, or I mined it in 2015.
Right.
Yeah.
So awesome. So let's now pivot into what we're going to chat about today, which is, I guess first I'll have you introduce yourself and what do you do?
Yeah. So I have two hats. So on one hat, I am a tech founder, founder of AI music startup. I've been actually tech founder past 10 years. Various forefront technology. I'm always interested in technology. But at the same time, since 2018, I have been investing in crypto assets. Started in Bitcoin and other assets. I participated in DeFi and most of the different protocols, yield, from 2018 and the last cycle, and then this cycle. So I'm pretty, I would say not the crypto OG, but semi-crypto OG, since the 2017 cycle. Yeah.
And now you're working on a digital asset treasury.
I would say I'm an investor. Actually, I was instrumental in structuring the placement of a number of international investors into this Hong Kong company that I met with my partner, both Abraham and Cherry, back end of last year with the main shareholder in Dubai. It was some random meeting, random opportunity. We met the one of the shareholder, and they proposed to us the idea of digital treasury strategies to kind of create another version of MicroStrategy and explain to us, the essence of the MicroStrategies business. And end of last year, we heard about it. I was like, okay, that sounds good, but we didn't take any action to it. And fast forward to 2025, many companies started to do DAT, so digital treasury strategies, and also U.S. adopted the Stablecoin Act. There was listing of major crypto companies like Circle. Obviously, there was ETF. So the whole regulatory stance changed, right? And more and more people started doing it, and the logic of DAT became much better understood. And we were like, oh, hey, there's this company, the founder the main shareholder seemed to be visionary, and they proposed this to us before the market got hot. Maybe we go back to him and see what's going on. And then we went back to talk to them, and what we discovered is it's a really, really good team that has been preparing to launch something in Hong Kong for almost 2 years. And it's not as easy or clear or straightforward to launch a Bitcoin treasury company in Hong Kong as it is to launch in the US. Because in the US, regulation is that you can just raise, ATM, sell infinite shares and raise infinite capital and keep buying Bitcoin, and no one is going to say anything. Whereas in Hong Kong, you have regulatory scrutiny from SFC, which is the equivalent of SEC, and you really need to create some strategy that can navigate the regulatory landscape so that you can both satisfy the regulators as well as accumulating Bitcoin. And so we're like, oh, this is cool. We're going to talk more about it. But then once we heard about the strategy, we're like, this really makes sense. This is really cool. If this succeeds, it could be a next big thing. So I immediately was like, okay, let's do something. And I spoke to my partners and investors we knew at the time, and people got interested very, very quickly. Within like 2 weeks, we got almost some of the top investors in both crypto and traditional finance to come in. It took a little bit of time for the regulator to agree, like over a month. And eventually the company and the local team were sufficiently proficient in working with regulators and got the placement approved, and then we made the investment.
For those who aren't as familiar, for those who are less familiar, what is the fundamental strategy of a digital asset treasury? And then how, I know you guys have a couple little tweaks and variations that you're working with. Talk about those as well.
Yeah, I think there are various types of DATs, or as a total, I think there are 3 types. The first type is similar to a MicroStrategy that had a business and started accumulating Bitcoin, and over time the Bitcoin became a more important part of the company.
Right.
But there was a gradual accumulation process, and the shares were already out there. So they didn't just release the shares to everybody. So it was a gradual process. That was actually pretty good because it avoided the pump and dump kind of situation. And they had a real business, and the real business was generating revenue. That revenue was paying for interest. Initially, it was convertible bond, right? It was paying for the interest. So that was the first success case. That's the first type, right? It's a real business that started accumulating Bitcoin in its treasury, but over time the treasury got more important than the existing business itself. Right? The second type are these reverse merger SPAC deals where a lot of these Wall Street guys got in, namely like Nakamoto or recently a lot of others. So these are basically Wall Street bankers came in with an idea, and they raised a bunch of money to buy a certain coin, like BNB, Solana, Ethereum, Bitcoin, and then they merged that asset into a shell and listed. And here's a problem, right? The problem first, the company doesn't have any business, have no real business, other than raising money and buying the coin, right? Hoping the coin is going to go up. Secondly, you have a major problem on registration of the shares. When the shares gets registered, if there is a premium, or there was a premium to NAV, everybody rushed to capture that premium, basically rushed to sell. Then, and the most recent example has been, dumping to or even below NAV. Right. So it's a second type. It's wait to see if this strategy is going to be successful long term or not. We're not so sure. So far, they haven't performed to the promise. And I think there is a third type, and the third type is basically this Hong Kong company, right, called HK8521. We really like the ticker because I think the team were very smart in acquiring the ticker. 852 is the area code of Hong Kong, and 1, right? So, and basically means Hong Kong #1 or #1 in Hong Kong, right? So they told us this, hey, the ambition is for this to become the #1 Bitcoin accumulation company in Hong Kong, maybe even the #1 stock in Hong Kong. I was like, wow, that's a good idea. But the reason we really invested was not just because of ticker. It's also because the strategy. And they came up with this idea of not a DAT, but something we call a BAC, Bitcoin Accumulation Company. The difference between a BAC and a DAT is that a Bitcoin accumulation company tries to accumulate Bitcoin through real business operations. But that's also different than MicroStrategy. MicroStrategy is I have a software business. I use my revenue pay for the interest of the debt, to service the debt, right? Here is a company that's trying to have business that returns Bitcoin as revenue, and holding that revenue in the treasury,
right?
So, and as a result, the company needs to be part of the Bitcoin ecosystem, such as hash rate power, or such as asset management, structured products, etc., working both with the computing part of Bitcoin, but as well as with the traditional finance, bringing traditional finance into Bitcoin part of business, where the majority or almost all of the revenue are Bitcoin. So we thought that's very interesting, and this is probably it's a strategy where you're using your main business operation to accumulate Bitcoin, and often. What we talked about is the ability to accumulate Bitcoin at a discount, right? So imagine you have a company that raises capital and accumulates Bitcoin at a discount. That has never happened so far. So far what happens is ATM, right? ATM at the market financing is basically Lisco, DAT in the US, raise capital, and new shareholders are paying the underlying asset at a premium, at a multiple, let's say 1x, 2x, 3x, with planning. NAV. Basically, Bitcoin is 100K. I'm paying 300K per coin, and then they go buy coin at 100K. Right. So as a new shareholder, I'm actually diluting my shareholder value every time I'm investing because I'm buying Bitcoin 3x the NAV. Right. But what if we can do something reverse, right? I wouldn't say quote unquote, it's almost like quote unquote like a reverse ATM, where every time the company buys the Bitcoin, it increases shareholder value because it can buy Bitcoin at acquire Bitcoin at a discount. Because think about it, if you're running a business, right, that acquires Bitcoin, your business must be profitable. You're not running a business at loss. So the profit is Bitcoin. So you're acquiring Bitcoin at a discount because you have a business.
So we have the underlying value of the Bitcoin, then the appreciation of that Bitcoin, and then meanwhile we're adding to the Bitcoin stack, accumulating.
We're accumulating at a discount, right? So the company may have multiple strategies to accumulate Bitcoin. So obviously, we'll use, whenever the market is good, we'll use traditional ways to accumulate Bitcoin, like convertible debt or raising capital to buy Bitcoin. Actually, the company just bought its first Bitcoin through a placement, the placement we did. But at the same time, the company is actively engaging in businesses such as computing business or hash rate business or AI or asset management, where the actual return of that business is Bitcoin.
Right.
And it basically wants most of its business, or the main business, returns only Bitcoin. And returns Bitcoin at a discount. So let's say investor puts in another X million. That million funds this operation. And the operation brings back a certain number of Bitcoin. But if you calculate the price, the number of Bitcoin that came in, the amount of dollar investor invests in, you will find the company accumulated Bitcoin at a discount to spot.
Right. And I think typically, if I'm not mistaken, the average MicroStrategy holder has been diluted over the recent term. Theoretically, this would be the other way around, right? Where over a given share, I would have more and more Bitcoin.
The idea is that there are going to be three situations. Obviously, the company will continue to raise more money, but the Hong Kong general mandate is 20% per year, right? So there are three three situations that could happen. The first is a slower or much slower dilution in shareholder value as the company expands the asset.
Right.
The second one is at some point will cross a threshold where it's equal. As the company expands, issues more shares, their shareholder value are not diluted because the number of Bitcoin are also expanding fast. And the ideal situation is what we ultimately want to get to is every time I raise capital, the company accumulates more value than the amount of capital I have raised, therefore increasing shareholder value every time.
Right. So what are the differences what are the differences in financial characteristics of a Bitcoin accumulation company versus just like holding Bitcoin?
I think holding Bitcoin or just ATM holding Bitcoin, raising capital by Bitcoin, it's a great strategy when you are in the bull market, right? Things are just going up. Everybody wants a scarce asset. Then you raise more money, buy more Bitcoin. Just the Bitcoin, you're holding the Bitcoin also going up. What happens once we enter a sideways market or a market that's trending down, right? Obviously, we all believe that Bitcoin has entered the perpetual bull market. Also, today we had the good news where the U.S. finally decided that Coinbase, etc., state trust can hold, Bitcoin crypto assets. That's going to be a big unlock. But, at least my experience being in finance for the past over 10 years, almost 20 years since I was a student, we always have ups and downs in financial markets and always cycles in crypto. Maybe the cycle is less pronounced now, but there still might be cycles. Even if it might be cycles, it means we might have a situation where next year Bitcoin will be trending down. And what will these pure play, DAT company, what are they going to do? They're going to be holding coin and stock trading at below NAV,
right?
And some of them may not survive. And if they don't survive, we may even have a negative loop where they have to sell coin to buy back shares, sell coin to buy back shares, and creating, more selling pressure on the market and and make the coin go lower, and then they have to sell more shares,
Right.
So.
Yeah, and we've seen this too in like DeFi where, people say there's this like magical floor value where like our TVL, our NAV is going to be the floor value and no one is going to, everyone's going to purchase back to that price, and it doesn't play out that way. In these contractions, it always gets uglier than people can possibly imagine too.
I mean, in finance, we know whatever prop the asset up often becomes whatever brings the asset down, right? This cycle is DAT, so prop the asset up. That's why I think a BAC company in a sideways or bear market will be much more resilient than a DAT company, because DAT is the only business is raising capital and buy coin.
Right. So it's almost a way to position for like a general long-term bullishness, but understanding that there will be periods of contraction and periods of expansion over that asset that you're accumulating.
Yeah, you want to accumulate the asset when it's down, right? Because we believe Bitcoin will continue to go up in value, many years going forward. So you want to basically dollar cost average Bitcoin. So in a bull market, a BAC company will use financial instruments to accumulate Bitcoin faster, but in a bear market, will continue to accumulate Bitcoin through its main operation of business.
And how has mining or, like the hash rate business, how is that performed as a strategy to accumulate Bitcoin in bear markets versus bull markets?
So that's a good question, right? There's going to be a first part and there's going to be a second part, right? In the first part, which is the simplest, is the company buys or finances and buys hash rate from a major miner that has a hash rate, and they're able to deliver resulting coin at a discount to the company.
Right.
Here's a trick, because not every miner is willing to do it. But think about it, right? The miner has to bear the cost and the risk of holding the mining machines, operating it, as well as paying electricity, all that stuff, right? What often happens in these situations is you have a hash rate provider that don't actually have the hash rate. They're selling empty hash rates, or they're overselling hash rate, and in the end they can't deliver, right? So in this situation, is can you find a partner that is trustworthy strategic that has a long-term interest in working with you that can really provide the Bitcoin as a result, at a discount. So I cannot say who, but I think the company is in advanced negotiation. Hopefully something will happen soon with a major player on a long-term basis to be able to work this hash rate operation out. That's the first part. And the second part is, okay, if it works as a principal purchase for the company, can the company also act as a broker to sell some of this hash rate to its clients, to the public, and earning fees in Bitcoin back, right? So let's say the company's principal purchase earns, I don't know, let's say 10% discount. And the company sells to you, sells to the client earns 8% discount. Therefore, the company is pocketed 2%, right? So it's both a principal purchaser and a broker of hash power. But as a BAC, the company has the ability to continuously raising capital using various financial instruments such as equity, debt, convertibles. These various instruments will raise capital and help the company to continue principal purchase, and also fund marketing and BD of additional brokerage business for more people to purchase through the company, and then the company become a major and stable business client of the mining company, right? So what the mining company don't want is you purchase the hash rate for 3 months and you're done, and then they're holding a bunch of mining rigs, and what do they do afterwards, right?
Right.
So if you can be a long-term sustainable client and increasing the amount of hash rate you're purchasing, right? And there's also a trick. There's actually benefiting to the mining company because you're paying them ahead of time, right? Let's say we did a placement, we raised, let's say, 20 million, and we send the 20 million to a mining service company. The company delivers Bitcoin over the next, let's say, 3 months period. Every day we'll deliver X number of coin over a 90-day period. But the mining company gets that 20 million ahead of time, right, on day one. So there is some time value. So the money is a kind of financing to them,
right?
Whereas we're getting coin over the next 90 days, but at a discount to what we would have bought today.
I'm curious about DATs as kind of an asset class, especially as it's relevant to the Asia market. So something that happened in the US was companies or institutions that couldn't get direct exposure to Bitcoin would buy MicroStrategy, for an example, to get Bitcoin exposure. Is there a comparison there in Asian markets?
I think the opportunity is much bigger here. And also, I think the edge of DAT in the US are eroding, or kind of losing its selling point. Right? Because initially, very few institutions have direct or legal exposure to Bitcoin. Could not have exposure to Bitcoin. There was no Bitcoin ETF.
Right.
And for a long time, it was not clear whether if Coinbase custody or Anchorage could legally hold Bitcoin. They had a state trust, and maybe only banks could hold Bitcoin. So that was kind of the choke point 2.0 from SEC. And now it's a Bitcoin strategy, so crypto strategy. So fundamentally, there is a shift where legally more and more institutions can buy Bitcoin directly and deposit it or have it in custody with Coinbase, for instance. And then there is less demand for direct exposure via a proxy, which is a DAT. If you think about it, right? Every business has some sort of fundamental reason. You're always solving some sort of a problem. I wouldn't say that the DAT in the US will lose all its value because there are other values besides just exposure.
Right.
One of the value is ability to acquire Bitcoin quickly, acquire at the speed of acquiring Bitcoin, and your ability to raise finance, acquire more coin. Once you're a juggernaut like MicroStrategy, can't be ignored because it's a certain percentage of the total supply. But I'm saying is that the direct, the lack of exposure rationale is kind of diluting or eroding a little bit, right?
Mm-hmm.
But if you look in Asia, right, besides the US, what's the second largest economy? It's China, right? Which country has the highest saving of any country in the world? It's China. Chinese people save a lot of money.
Mm-hmm.
And which country has the highest M2? It's China. China has double the M2 of the US.
Wow.
It's incredible. China has printed more money than the total money in the money supply of the United States, where the United States has a bigger GDP, but China has printed double.
Uh-huh.
There's a reason why Chinese government don't want RMB and USD to freely convert, right?
Right.
Because it's printed, it's got to double the M2, right? So it can't convert. And they also don't want Bitcoin to, I mean, at least right now, Bitcoin is not legal in China. You have no way to have legal exposure to Bitcoin in China.
Uh-huh.
Right? So Hong Kong serves as a proxy gateway to Chinese wealth.
Right.
Right now, not every Chinese citizen can trade in Hong Kong, but the high net worth individuals, the wealthy people, have ways or have funds offshore to be able to trade Hong Kong stock, get legal exposure. But over time, Southbound or Hong Kong Connect may allow certain company. I think they wouldn't allow a pure DAT, a pure Bitcoin purchase play to be on Southbound or Hong Kong Connect.
Mm-hmm.
But a company that has real business, where its revenue is in Bitcoin, may qualify. I'm saying may qualify. Speculative, but it makes more sense. Let's say I'm a company that's doing HPC, high performance computing, but my clients are paying me in Bitcoin.
Right.
What's wrong with me holding that Bitcoin?
Uh-huh.
I'm a real business.
Yeah.
To be part of Southbound. But if you're part of Southbound, it means you would have infinite liquidity of, in China, there are like around 150 million retail traders.
Wow.
Of retail stock traders. The biggest retail stock trader cohort in the world is, more than half of the US population. So imagine if they can trade Hong Kong stocks through the Connect program, the RMB never leaves China. So the RMB goes in, gets Bitcoin exposure, and when they exit, the RMB comes back. So the RMB never leaves China, which is what the government is okay with. So this could be a giant. I mean, it's almost like, think about it. It's like this high pressure pot where you're cooking with a small hole on top, right? Mm-hmm. And you hear this sound, and that's all the high pressure gas trying to escape, right? So, and then imagine you have a company stock which is right on top of this little hole,
right? A single point.
It shoots to the moon, right? with infinite liquidity. In China, we say in a wind tunnel, even a pig can fly. So, but the key is to find the wind tunnel. And there is a huge wind tunnel, this tiny hole, which is, from China. Another country have similar problem is India, right? So India also have capital control, so huge population. So any country where you have capital control, and then you have a need, a very strong need of exposure to Bitcoin. Or any country you have a lot of inflation, right? You have strong need for exposure in Bitcoin. Mm-hmm. And the problem is that U.S. has been, we say the U.S. fiscal discipline, whatever, is not good. The government is shutting down. They're issuing a lot of debt. But we look at it around the world, the rest of the world, countries are doing even worse, right? Like Argentina, like Turkey, certain countries in Africa, or even countries printing a lot of money and eroding the wealth of its citizens. And these countries, traditionally, they didn't have access to pristine financial assets that can, preserve wealth, right? And Bitcoin is this, for the first time, through mathematics, through technology, nothing, protected by the government, individual can protect wealth, only through technology, purely through technology. So it's the greatest invention, one of the greatest inventions in human history of preservation of wealth. And unfortunately, certain countries just legally don't allow, it's not possible for the individuals to have beta exposure to that preservation of wealth vehicle. And DAT or BAC in this case will become the de facto, beta exposure vehicle for these individuals. So I think that's going to be the biggest opportunity in the next few years for at least company that holds Bitcoin.
Mm-hmm. So it's almost certain that if there were to be kind of indirect Bitcoin exposure that Chinese investors or Chinese retail investors could buy, it would almost certainly be through a Hong Kong stock.
100%.
Yeah, very
100%.
cool.
And also there's another advantage of buying the stock of a BAC versus holding the Bitcoin.
Mm-hmm.
The problem holding the Bitcoin, it's volatile, and also when it goes up, very people can really hold it that long term. They always sell.
Mm-hmm.
Whereas a stock, the company is holding the underlying asset long term and never selling. So it's a better way to accumulate, as an individual than sometimes holding the coin.
Right.
And there is a regulatory premium, right? So when you hold the coin yourself, you have to have either self custody or you have to custody somewhere. And sometimes, if you're not careful, you can lose the coin,
mm-hmm.
Or the custodian can, run away and things like that. We had Mt. Gox, we had a lot of situations.
Right.
Whereas here, a listed company is fully regulated, right? It is the highest transparency, audit every year. It is basically a pristine platform where you can trust the platform, to hold the coin for you.
Mm-hmm. What's your greatest ambition for this company?
I think the name says it. Hong Kong #1.
Uh-huh.
Right. So I think there's going to be several steps, right? The first step is the company already accomplished, buying the first coin.
Right.
And SFC is okay with it, right? That's very, very important. The second step is to start the Bitcoin accumulation business.
Mm-hmm.
So starting real business that returns Bitcoin as revenue, right? And once a company has proven that, there's going to be infinite capital that comes in to prop its business up, right? So the investor will be like, hey, if I invest X amount of dollars, the company will increase its operation, increase its business,
mm-hmm.
and return more Bitcoin at a discount.
Right.
And this flywheel will start until the company hits somewhere around $1 billion market cap. Once it hits $1 billion market cap with sustained volume, which we believe will happen because once you get to a certain size, a lot of institutions in Hong Kong or in Asia will need to allocate. You have passive capital that will allocate into the company, right? And also we are doing a lot of marketing around the world for the world to know the great opportunity here, to provide, to create a BAC for the Chinese wealth market, right? So once you get to that stage, $1 billion market cap volume, you're automatically pre-qualified, or at least you're qualified to apply for the Southbound or Hong Kong Connect program. And then it's important to show to regulators that you have real business. A company, I would say almost all the other DATs or the traditional US DAT strategy in Hong Kong just wouldn't work. First, you can't just have an investment company to be listed. They would just delist you. And secondly, if you're just raising capital to buy coin, they will stop you. And if you get to that size, you will never qualify for a Southbound. Chinese government would never agree. That's why a Bitcoin ETF is legal in Hong Kong, but Bitcoin ETF is not on Southbound.
Right. Could this company compete someday with the MicroStrategies of the world, or will we have a MicroStrategy of the East and a MicroStrategy of the West or something?
I think there will be 100% be a MicroStrategy of the East, but whether if the company can get to the same amount of coin, that's debatable. And we have to be realistic that MicroStrategy started first, and they've already accumulated a huge amount of coin on percentage, right? It's almost impossible to accumulate the same amount. But we never know. It's possible the company, maybe not through acquiring accumulating the coin itself, maybe through asset management, right? Could get to over 100K in coin. There are still a lot of individuals or institutions in Asia, old miners or exchange other groups that hold a lot of Bitcoin, like thousands of coins, sometimes over 10,000 coins, right? And instead of holding the coin yourself with zero yield, maybe you can have a list co manage your coins through a treasury operation where you're earning some sort of a yield in fiat.
Right.
Well, the coin still stays there, right? And the Lisco also sharing some upside of the yield of treasury operation for that coin.
Mm-hmm.
As a result, the company could be managing hundreds of thousands of coins without having to purchase all of them.
Right. Wow. Very cool. Awesome. Well, I think that's an interesting note to wrap up on, and some really ambitious goals. So it was really cool talking to you. You're phenomenally experienced in this space and have some really interesting insights on DATs and this new category being redefined BACs. Thanks so much for your time. We really appreciate it.
Thank you.
Excellent.
Thank you.